Hello everyone, welcome to my channel. Today I'm going to talk about single versus double entry bookkeeping. Before I get into the video, be sure to subscribe and leave a comment below saying I subscribe. I will try to personally reply to your comments. One of the first financial decisions you must make when starting a small business is whether to employ single entry or double entry bookkeeping. You are probably not looking forward to dealing with the accounting side of the business if money isn't your strong suit. Businesses, on the other hand, must keep meticulous records of their financial activities. Bookkeeping is the term for this procedure. The ability of the owner to develop solid accounting standards is critical to the company's substantiability. Single entry. Single entry bookkeeping is likely to work for you only if your company is small and straightforward, with little activity. It's comparable to having your own personal checkbook. When you employ single entry accounting, you keep track of transactions such as cash, tax deductible cost, and taxable revenue. Single entry bookkeeping is distinguished by the fact that each transaction is recorded with only one entry, similar to your check register. Entries are entered as a positive or negative quantity in one column. You can actually keep a two-column ledger with single entry bookkeeping, one for revenue and one for cost. Because each transaction is recorded on only one line, it is still termed single entry. Large complex businesses should avoid this sort of bookkeeping. It does not keep track of accounts like inventory, payables, or receivables. Single entry bookkeeping can be used to determine net income, but not to create a balance sheet or monitor asset and liability accounts. Instead of debiting and crediting a series of books, as in double entry bookkeeping, transactions are recorded as a single entry. Double entry. For their accounting needs, most firms, especially small businesses, use double entry bookkeeping. The fact that each account has two columns and that each transaction is recorded in two accounts are two hallmarks of double entry bookkeeping. For each transaction, two entries are made, a debit in one account and a credit in another. If the corporation wants to pay off a creditor, this is an example of a double entry transaction. The amount owed to the creditor would be deducted from the cash account. That would be the credit. Then, because the creditor account has received the amount of the credit the business is extending, the double entry reduces the amount the business now owes to it. That's where the credit goes. You should utilize double entry bookkeeping instead of single entry if you wish to maintain track of assets and liability accounts. Other advantages of double entry bookkeeping over single entry accounting include the ability for the owner to precisely compute profit and loss in complicated companies, the ability to create financial statements directly from the books, and the ability to discover errors or fraud. Thanks for watching this video, and do not forget to subscribe to my channel.